everyone, welcome to Barchart Live. I am JD Durkin. Whether you trade stocks, you trade options, or you trade futures, one thing matters above everything else: having the right information before you place a trade. Today, we're taking a closer look at one of the fastest growing areas of market analytics, using options and futures data in order to better understand where markets may be headed next. MenthorQ has just rolled out real-time futures analytics along with new AI-powered tools. They're all designed to help active traders build a game plan before the market even opens. So today, we will be breaking down what all this means, why options data matters, even if you never trade options, and how ultimately traders can better put into work in today's market. Fabio Ruggeri joins me now for this conversation. He is the CEO at MenthorQ. Fabio, it's great to see you. Thanks for taking the time to make this happen.
Thank you, JD, and great to be here. And thank you guys for having me. Very excited.
Of course, as are we. So before we really dive into the nooks and crannies of this all, for anyone who has not heard of MenthorQ, give us the too long didn't read version. What does the platform do? And ultimately, who is it built for?
Yeah, so we are basically a quant data platform built for active investors. And essentially, my background comes from the institutional world. So I was at Bloomberg for about 11 years. And basically for many, many years, retail active traders were kind of left behind, right? There was not a lot of tools before all these AI saga and before like the COVID happened. So what we try to do is try to bridge the gap between what's available and the framework that we have in the institutional space with what's available for retail active investors, right? So we are trying to essentially harness data point and data sets that can provide an edge for active traders before the move happens so that you can understand what's going on behind the scenes.
Let's talk a bit about why options data itself even matters. Now, a lot of people may think, oh, options data, it's really just simply for people who trade options. Why is that line of thinking incorrect, Fabio?
Yeah, so basically we need to kind of like go back in time and look at what's changed in the market. So when we were in the early 2000s, before the credit crisis started, fundamental analysis was kind of like driving the selection of companies, like, the Warren Buffett style analysis. And then obviously COVID hit, we had quantitative easing for many, many years. And obviously fundamental analysis did not work anymore. So a lot of traders moved into technical analysis, so technical trading, and then COVID hit, right? And then this is when really 2020, the option exploded, the option market exploded because everybody had more time at home and they were looking for instruments that could bring them leverage to make potential return in a shorter amount of time. And then obviously we had the GameStop saga, so that accentuated even more in 2021. So even if you don't trade option, if you're a futures trader, if you're a stock trader, it's important to know what's happening behind the scenes. So the volume of daily active options has quadrupled since 2019. So the flow that we now have in the option market in 2026 is 4 times more than what it was before COVID, and is 8 times more what it was 20 years ago. So when I was at Bloomberg, options were really simple, an instrument for institutions to hedge against an exposure. Now they are becoming a tool to potentially predict where the price can go. So yeah, I think that's why it's really important.
Fabio, what would you say is the biggest thing that active traders are missing if they are simply and only looking at price charts and not taking into account some of these other important pieces of data?
Yeah, so I think the most important part goes back to market mechanics, right? So the buzzword that we now have in the market are order flow, gamma exposure, like all of this is now becoming a buzzword. But in reality, we need to break down why it's so important and why it's gonna be an edge for active traders, right? So if you think about the option market, probably like 80 to 90% of the transactions are executed by market makers. So that means that if you buy a call option on SPX, most likely on the other side, there's not gonna be a buyer or a seller, whether you buy or sell. There's going to be a market maker, right? Because there's so many option contracts. Think about how many strike prices we have on the SPX and how many expirations we have. So you can trade daily options. So there's thousands and thousands of option contracts out there, and there's never going to be somebody on the other side willing to buy or sell your option. So market maker becomes super important. So probably 80 to 90%. Don't quote me on the exact number, but is executed by market makers. They take the opposite position to the retail investor or the active investor, right? So they are basically taking a risk. And by doing that, they need to offset the risk. So they're going to start buying or selling a certain amount of underlying asset to offset that risk. So essentially, as a futures trader, why is that important? Because if you are trading SPX options, market makers are going to be hedging with the ES futures because it's a great instrument for hedging. So that creates a lot of more flow in the market, more volatility, and that's why the price moves sometimes without any news or catalyst, is because there's a lot of option activity and there's a lot of dealer hedging that goes on to that.
So let's talk a lot more about this exciting new futures launch. Your big news is real-time futures data. Fabio, what is new and why does it matter?
Yeah, absolutely. So essentially, like, we started the company about 3 years ago, and we really started only looking at SPX options. This was when the big trend on zero DTEs was starting back in 2021, 2022. We saw like a massive increase in volume. And of course, our initial clients were option traders that wanted to find better entries and find the strikes for their options. But then this type of data increasingly became popular in the futures market, right? So everybody trading ES was looking at this data, started to look at this data, and of course, more providers came in, more data came in, and we basically then decided to invest in our data partnership, and we now have a great partnership with CME, where we're now taking real-time futures data from CME on all 4 exchanges, so we can provide you guys with the real-time gamma levels and option models, updating every 5 minutes on about 40 plus futures contracts, right? So from whether you're trading crude oil, gold, Forex, rates, of course, ES and NQ are the major ones, but like there's, we also have soft commodity data there. So would love to show you guys how that works.
Well, let's do it. I mean, I know that we've got part of this is kind of the show and tell, the demo part. So let's pull up the platform and give me a sense on how this actually works here, Fabio, and what are we looking at?
Yeah, so the most important part, like, I come from the institutional background. I come from Bloomberg, and obviously the most respected financial data platform in the world. But when you look at futures market, there's not really much information out there, right? So besides price, volume, order flow, maybe cut reports, all of that stuff, there's not really a lot of analytics, and also there's not a lot of option tools. And the importance of option is very key for futures market because they are growing in terms of volume. So what we've done in the platform, now you have the ability to look at futures. And as you can see here, we cover a lot of different futures, from Forex to commodities, metals, soft commodities. So we have a lot of, for example, a lot of niche players that trade live cattle, lean hogs, copper, all of that stuff. And of course, we have NQ and ES, which are our main assets. So whenever you look at that, then you want to look at the option activity. So what we have here is we look at gamma and gamma levels. Why is that important? Because that can help us understand where market makers might be exposed at certain strike price or certain levels. And those levels tend to become magnets and reaction zones. And we're going to show you some example also in a second. So essentially, for traders, why is this important? First of all, it's important to understand if we are in a positive or a negative gamma environment. So essentially what we do there is we look at the option chain and we understand, we try to build a model that can give us that information so that we can understand if market makers are in a negative gamma or positive gamma environment. That's going to be important for futures traders because when we are in a negative gamma environment, volatility is going to be much higher. When we are in a positive gamma environment, then we're going to see more like standard movement and potentially like range trading days that we see there. It's important to know what happened in the past. So here you can see basically the gamma structure over the past few days, months, and weeks. And it's important to understand what's going to happen in the future. So looking at all expirations that we have in the future, are we in a positive or negative gamma environment on 0 DTs, 1 DTs, weekly, and so on. Scrolling down, also we have our volatility insight. So we look at the volatility, historical and implied, VRP, which is the risk premium, so the difference between implied and historical volatility. We look at term structure and we look at skew. This is important for options and futures traders to understand how volatility is pricing, what's the market looking at, and how we do that. And we do that on futures now. So which I think is important, that there's not really a lot of information on the future side. Then we break down, again, the goal is really to simplify the breakdown of the data. So we break down the gamma structure and the option structure for all the different expirations, both end of day and intraday. So you can see how things change every 5 minutes. And then you can also look at where your exposure is at different strikes, right? So when I look at this chart, I know that there's a lot of option activity. I can also change and look at open interest for certain strikes. And I can see basically where are the areas that I should be paying attention to, I should be basically looking for. Then the power of the platform is really not only the data like I showed you, but the ability to overlay all this data in a chart, right? Because one of the most difficult things that we had to do is how can we simplify a really complex information so that people that have never seen option data can simply understand that. So we really build very simple, an indicator that has lines on the chart. So it looks like a support and resistance area, but is now powered by option data. So all the data that we saw before is now available to you as an overlay right there, both end of day and intraday, so that you can quickly understand why is this area becoming a reaction? Why are we bouncing back, and why are we actually coming back down exactly at this area here? So you can quickly see on the chart how you can then plan your strategy there.
It looks incredibly comprehensive. I wonder personally, Fabio, do you have a favorite indicator or a favorite feature of the platform? Maybe even something you just ticked through with us in the last few minutes.
Yeah, so my favorite one, and let me share this screen instead, is really actually, let me show you this one, is our now new back testing tool. So like the problem is that a lot of traders struggle to understand how to place their trades once they see these levels. So the levels are actually working really well, but how do you then plan your day when you place a trade, right? So what we've done is we introduce our back test, and we basically, and I'm going to show you how that works in a chart. So we now can forecast the probability of success of each of the levels based on similar market conditions. So this is example is on MenthorQ, right? So our one-day mean that we are basically approaching right now has a 92% chance of holding for the day based on similar market condition in the past 3 years. When we break this level, and you can see it here, there's a 73% chance that we come back. And when we don't break, there's the average close after we break is about 230 points below. So what I can then go and do here is, let me show you this chart, is really looking at this data in the same format, but in a chart view. So now I can overlay all of this information. So I have my gamma data, and I have my data here. So what we are looking now is, first we're looking at the first level that we broke throughout the day, which is our put support right here. So we break this level right here, and we know that this only has a 68% chance of holding, but there's a 44% chance that we come back. So we go back, and then we come back, and where we go is really those boxes right here. So when we break, we typically go to the medium and to the average. So as a trader, how I trade this is, if I think that we're going to break, I now have my first target and my second target. And I know that if we go beyond this point, it could be that it's a really negative day, but why would I risk it? I want to take my profit and I don't want to lose them. If I then change that, and I basically look at the other level, which is our one-day main. Now this one is even better, because then we can click here. As we approach here, we know that we have a 92% chance of holding, and we have a 73% chances of coming back. So when we look at this move right here, we hit the level and we come back. So that could have been a really nice trade right there. So again, the goal is really to simplify how you understand this data so that you can put it into an actionable plan.
Fabio, if this was, let's say, your first day using MenthorQ, where would you start?
Yeah, so the first where I would start is if you come to our website, and then let me show you this. You go to our academy. So we have an extensive library of information, right? So we have our onboarding course, but the best thing that I would do is going back here. We now also have our AI, which is Quinn. The AI, which you can activate by going into the chat here, open it up, and basically the best thing you can do is just type a question, and I'm gonna show you how you do that.
Okay.
So I'm asking basically very simple, give me a learning path for the first 7 days on how I can use your platform, how I can learn about it. So then the AI basically is going through, so we have about probably 1,000 hours of video lessons. We have about 900 pages of documents, 900 documents, case studies. And basically what the AI is going to be able to do is going to be able to surface through all of that and basically give you exactly the links that you need to be able to understand all these concepts.
Mm-hmm. Can you talk to me a bit more about the AI? Because you mentioned that. I know you built AI directly into the platform. A bit more about what the AI actually does on behalf of the user experience.
Yeah, so the AI is, and I want to show you something that I have here. So the AI is actually not a simple chatbot that basically only gives you answers about general knowledge, right? So we built our AI and we built what we call a quant engine. So our quant engine is able to not only surface all the general things that you need to learn to be able to trade. So we feed the AI with a lot of knowledge, our own research paper, every document that we wrote in our website is now feeding through our AI. Our lessons, our video lessons, we have about 1,000 plus hours of that. But the key is really feeding the AI with our data. So that's the key difference.